Welcome to DebtCircle Key Roundups. I am Vijendra.
And I am Leela.
Let's begin part 2 with developments in the corporate bond market. RBL Bank's debt instruments received a AAA stable rating following a capital infusion of Rs 26,016 crores by Emirates NBD, lifting the bank's pro forma capital adequacy ratio to 35.32%. Asset quality also improved, with gross non-performing assets falling to 1.5%.
That capital boost significantly strengthens the bank's financial position. Emirates NBD now holds a 60% stake and plans to merge its Indian operations with RBL Bank. While unsecured portfolios such as microfinance remain areas to watch and profitability is still modest, investors will be closely monitoring how the bank uses this stronger balance sheet to support growth and improve earnings efficiency.
Moving on, CARE Ratings upgraded Nitin Spinners from CARE A positive to CARE A plus stable based on fiscal year 2026 audited results. The company's total rated bank facilities stand at Rs 2,438 crores, including substantial term loans and fund-based limits extending through the year 2035.
The upgrade reflects improved creditworthiness and should help the company secure financing on more favorable terms. Investors will continue tracking quarterly performance and debt servicing capability, especially given the scale of the company's obligations and its growing importance within the textile sector.
Godrej Industries also raised Rs 10 billion through separately transferable redeemable principal part bonds across 2 tranches maturing in 5 years 3 months and 5 years 6 months, both carrying a coupon rate of 8.23% and AA plus ratings.
Those ratings signal strong credit quality, while the higher coupon compared with several recent issuers reflects differences in maturity and risk profile. Investors continue to evaluate the balance between yield and credit quality as issuance activity remains strong across the bond market.
Another notable issuance came from India Infradebt Limited, which raised Rs 11.15 billion through a 5 years and 6 months bond issue carrying a 7.92% coupon and backed by AAA ratings from ICRA and CRISIL.
That AAA rating places it among the strongest issuers in the market. Combined with active infrastructure financing demand, these bonds demonstrate continued investor confidence in highly rated long-term debt opportunities.
LIC Housing Finance is preparing a bond issue worth up to Rs 35 crores, including a greenshoe option of Rs 25 crores, with a maturity of 3 years and 5 months, and expected AAA ratings from CRISIL and CARE.
With multiple AAA issuers active, investor appetite for secure medium-term debt remains strong. The final coupon rate, determined through bidding, will provide an important indication of prevailing market sentiment and pricing conditions.
Bajaj Finance is also entering the market with a 5-year bond issue worth Rs 20 crores and a greenshoe option of Rs 10 crores. The bonds carry a AAA rating reflecting top-tier credit quality.
Together with recent offerings from LIC Housing Finance and India Infradebt, the issue highlights sustained demand for high-quality debt instruments and reinforces confidence in India's corporate bond market.
Turning to real estate investment trusts, Mindspace Business Parks REIT reported revenue of Rs 3,216 crores for fiscal year 26, up from Rs 2,596 crores, while maintaining occupancy levels of 94%.
Those numbers reflect strong operating performance. However, refinancing risk from certain bullet repayments and tenant concentration remain important factors. Continued leasing activity and rental growth will be critical to maintaining the REIT's strong credit profile.
Let's discuss municipal finance. India's urban local bodies continue to face a major funding gap, and SEBI's reforms aim to encourage municipal bond issuance through lower entry barriers, pooled financing structures, and broader retail participation.
Even though only about 20 municipal corporations have raised roughly 4,540 crores through bonds so far, reforms combined with improved governance and municipal green bonds could significantly strengthen urban infrastructure financing in the years ahead.
In the jewelry sector, ICRA reaffirmed Senco Gold's ratings and assigned an A1 rating to a commercial paper program worth Rs 500 crores. The company also reported operating income of Rs 8,430 crores with improved profitability.
The rating supports cost-effective short-term funding and inventory management. Still, investors will continue watching gold price volatility, working capital requirements, and expansion outside its core markets to assess long-term growth prospects.
India Ratings assigned Veranda Learning Solutions an India BBB- rating on a term loan of Rs 140 crores and placed it on rating watch with developing implications.
That status signals uncertainty and means investors should monitor future developments carefully. Any operational or financial changes could result in an upgrade or downgrade, making ongoing disclosures especially important.
Another major development comes from the Income Tax Appellate Tribunal, which ruled that accrued interest on Indian non-convertible debentures should be treated as interest income rather than capital gains. The case involved a Singapore investor selling debentures shortly after a coupon payment date.
This ruling could have significant implications for foreign investors. It introduces additional compliance considerations and may alter pricing, tax planning, and transaction structures for secondary market debt trades involving accrued interest.
Funds India has entered the secured debt market by raising Rs 44.6 crores through its first secured non-convertible debenture issue, largely backed by high net worth investors and intended to support technology and product expansion.
The successful issue demonstrates investor confidence in the company's strategy and reflects growing demand for diversified fixed income products among affluent investors seeking alternatives beyond traditional equity exposure.
To conclude this section, India's debt and credit markets continue to show strong momentum through bond issuances, rating upgrades, infrastructure financing, municipal reforms, and innovative funding structures across sectors.
And the common theme across all these stories is access to capital. Whether through bond markets, commercial paper, municipal finance, or credit rating improvements, companies and institutions are finding new ways to raise funds, while investors continue to seek quality, transparency, and sustainable returns in an evolving financial landscape.